Good afternoon. Welcome to the Educate to Trade podcast with me, Chris Pollok.
And me, Z.
We'll get to these markets riding this wave higher to all-time highs again today for the S&P. But you're riding your own waves, I understand, this week.
Yeah, since last week I've been to Cornwall. I was in Newquay.
You like it?
I love it. The weather was pretty good. The surf was pretty good, and it sort of coincides with the trading that we do here on the candlestick.
Yeah, you got to ride those waves, right? You got to get on them and stay on them.
Got to stay on them.
That's when you really enjoy yourself.
Yeah, no, absolutely.
Yeah. Catch some big ones.
Yeah, caught some big ones. It was I think Thursday we had one of the biggest waves in small Newquay, a small Fistral beach. They call it Little Fistral, and on Little Fistral we caught a huge wave, and it reminded me of America.
Yeah, you're an LA guy, right? So you get some decent waves on the west coast there.
For sure. Cool. So it coincides pretty well with trading. I'm telling you, like, it's really it's like, for us, trading is like an animal that we have to tame. Mm-hmm. and surfing is pretty similar to that, where you have to catch the split at such a way where when the swell happens, so when volatility happens in the market, that's when we look to take our positions. It's the same thing with surfing.
And loads of patience. You got to wait for the right thing to come along. You can sit out there for hours at a time waiting for something good to come by, right?
Yeah, on Thursday we waited 3 hours.
Yeah.
For the right swell. All right. And it reminds me of precision with trading.
Yeah, no, I can see the overlaps in there. That's cool. Cool. Well, let's talk about these markets this week. It's been an eventful week, as always. Trump's been around, Powell's been chatting, and those two guys have been talking away to themselves and with one another this week. But maybe we can jump into the economic data just to kick us off. We had some pretty bad news out of the UK this morning. The retail sales were expected to be positive, again negative. Rachel Reeves has really got her work cut out here. Not looking good there. These durable goods numbers, this was the worst forecast since COVID, so not a lot of kind of orders coming through on the durable goods side of things in the US at the moment. So the numbers aren't looking too pretty, but hey, all-time highs, who cares?
All-time highs. That's what matters.
That's all that matters. The numbers haven't been incredible this week. We had mixed PMIs. If you look at the data here for the US, better on the services, lower on the manufacturing. Trump's manufacturing, getting America making again, isn't quite coming through. Kind of just negative numbers in the UK standard, pretty uninspiring figures out from Europe too. So it wasn't the biggest week in terms of news. We'll get to next week as well later on, but this week's more been about deals, rumors of deals, and Powell and Trump. Right. Yeah. So maybe we can start with Wednesday. We had the rumors on Wednesday, or the announcement really, that a deal with Japan struck.
Yeah.
Here we go. So a trade deal to be shared according to contributions. Let's take a look at, let's maybe have a look at these stock markets. In fact, at that time, if we go to like a 5-minute chart onto Wednesday this week, you can see here just before we're wrapping up here, just in time, they announced this deal. We got a big rally that took us once again to all-time highs on the S&P. The market hasn't really looked back from there, right? All week we've just been grinding higher on the deal with not the biggest partner out there. I mean, they're a big economy, but really it's EU, then China. They're the two big ones, right? And they're not done yet. Certainly not done yet, but there's rumors today. That kind of got the market sparked this week. If you bought that move and are still riding that bull now, you're still sitting fairly pretty. So it's been a nice week for grinding higher. No rollover after option expiry. Option expiry, should I say?
Yeah, for like new traders, when they look at the dollar index, how much does the Japanese hold of it?
Dollar index is mainly the euro, right? I think it's 56% euro weighted. So to be honest, I barely look at it. I'd more look towards the euro because it's a real market. It does give you a good barometer of what's going on with the dollar, but it's so heavily weighted to the euro. Then yen and pound are the next two. And then you've got some small bits of other kind of Antipodean currencies, Swissies and whatnot. But mainly it's euro. So the dollar index, it has an impact, absolutely. But dollar yen in itself is a hell of a currency to look at in general. So it might be worth having a look at the volatility that we've had in the dollar against the yen over the last week. It's been fairly interesting, you'd say, over the last week or so. If we look at that Wednesday deal, you would argue that, where were we about? Was in here mid-afternoon on Wednesday. Didn't respond. Well, it responded fairly well, but didn't last long, right? The dollar's been on a bit of a tear anyway. We can kind of see this if we look into other currencies. The likes of the euro has been coming off really relative to the dollar. This is also dollar strength. You'll see this reflected in the dollar basket as well. If you bring up the DXY, the Dixie up here, you can just see that move from Thursday. It's been a pretty good move of late. So yeah, dollar up, stocks up. Dollar down, stocks down maybe if these deals don't get done. That was certainly what happened in April. It was unusual to see a situation. Normally you get this inverse correlation a little bit with the dollar versus the stocks in the US. But yeah, this year those correlations were pretty linear during all that tariff terror. And yeah, if they can't get something struck by the end of next week, August 1st, maybe we can see a little shakedown coming in there again. Let's see.
Yeah, no, it's interesting times. One thing that, like, as from a technical point of view, when you see 97.8 right on the dollar index, and you see where we were in on the 22nd of July, right? We sort of tapped that sort of level again, and what do we see technically happen? We took out high and then we reversed.
Yeah, sweeping of highs is really, really interesting in the summer. I know a lot of people will know like the ICT concept, the turtle soup, the sweeping of 2-3 equal highs, right? It's everywhere these days on social media. You can't look at Twitter without someone throwing you the turtle soup theories out there. Yeah, I mean, they do work in general, but in the summer, they make sense. I always traded stop runs in the summer before I even heard of ICT. Because if you think about what's going on in the summer, it's lower volumes, right? I know full well the school holidays have begun. A lot of my friends are away on holiday already. I'll be away for a big chunk of August. Volumes will be lower. A lot of traders go on holiday when their kids are on holiday. They're of an age where they have children typically. So this is the times when they get an opportunity to get out of Dodge. So fewer trades are done. It's very difficult to get big positions on. So how do you go around getting big positions on? Why don't you run through stops? If you want to get short and you're near an equal high, then makes sense logically that there's buy side liquidity just above those highs. Retail traders, and not just retail traders, people have got to have stops somewhere, right? There's probably going to be some stop buy orders above these highs somewhere. So rather than you just layering into a market, and if you're doing 100 lots on the S&P again and again and again, someone's going to know about what you're up to pretty quickly. But if you can run a market through a level, squeeze everyone out, force them to buy, and then you just take the other side of that trade. And then this is kind of an institutional way of getting big positions on at even better levels than you would have done if you were just trading within the market. So a little bit of getting things to bust through is well known in the industry. I always used to call them stop runs. Now liquidity sweeps seems to be the terminology people like. But yeah, summer markets, I think you'll see this a lot. It's really not a bad thing to look out for in the summer.
You see, like how we sort of see the liquidity sweeps here. We do a similar thing in crypto, where we look at the liquidity heat map.
Yeah.
And sort of we keep a alignment on these levels here. So when highs get taken on, let's say Bitcoin, we normally see movements happen on all other assets. So what I normally do is I keep a 24-hour look on Bitcoin here, and I create alerts. So that, like for example, this sort of level here at sort of 116, we had a short sort of placed there, and what we see is normally at the heat map levels we do take liquidity, and for me those are like proper setups. So I did something similar here with the dollar index. We had all this news, and yes, that can cause a bunch of noise, but for me it was this 97.8 area, and we see it sweeped it nicely, and then we see easy setups, and then this sort of plays into all the US equities and all the other assets.
Yep, certainly does. I love this stuff that you have on crypto. I mean, it is almost tempting me to get in. Where did you hide this again? The heat map. Yeah, this is I think CoinGlass is free to use, right?
Free to use. It's free.
It's incredible. Like the data that you can get on crypto is incredible compared to the data that you can get on the ES. Like I pay for tons of data, whether it be for order flow, for volume, just to see like the real ticks in the market. Okay, and I get the Bitcoin future stuff with that too. But the fact that you can base, so just to kind of tell people what this is, right? This is where stops are.
Yes, right? Yes.
Like how is that information available? That is illegal information to the market. Brokers are allowed to know, but they're not allowed to tell the market where the stops are. Yet here we go, free software that can tell you where the stops are. It's cruel.
It's cool. It really is. And a lot of like sort of folks that get new into crypto with me, I make them study the heat map. And I'm like, you don't realize what you have here. This is something that you have to pay a lot of money for in futures.
You can't get it. Well, you shouldn't get it.
You shouldn't get it. Yeah. But here you can go to Binance, Bybit, or any of these big exchanges that are holding the Bitcoin, and you can literally like sort of put your alerts at these levels, and then see the reactions from it.
Yeah. And then you can use your order flow confirmations to get in, or whatever technical setup you want, right? You could use the ICT concepts, right? It's going to be a new high, so you can wait for that kind of reversal, fair value gappy stuff if that's your thing. Hopefully, if you come on with us, we'll teach you some slightly better ways of doing it with the order flow. But ICT is just order flow for beginners, in my opinion. So if you know about order flow, ICT, then the next step into order flow should be a relatively easy one and likely a successful one. Absolutely. So yeah, this is great. You also see with Bitcoin, you see open interest live, and net longs, net shorts. You don't get this information.
Here, I can just click the shorts here, and look what it does. It just gives me the whole shorts menu. But actually, it's putting me through Bybit here. But if you are registered, it will show you net shorts, show you net longs, and that's the beauty of CoinGlass data. And you do find correlations to like Nasdaq and other things. What I find is when I sort of have my alerts hit on TradingView from these levels, I then keep an eye on Nasdaq or S&P, and it gives me similar moves, man.
Yeah, I've been looking at this just from a trading of crypto again. I'm getting closer. Maybe after the summer, I'll dive back into trading these Bitcoins again in more of a short-term way than I've ever done before. Because just getting a hold of this data recently is just like, oh my god, it's whetted my appetite. If you can get that much information, becomes too easy. So I've had a little play with it on the demos for the last month or two, and the win rates are pretty damn good. So yeah, it's time to, I think after the summer has calmed down, I'm gonna have a look at it. Although I think these sweeps are more likely to happen in the summer because of this liquidity, right? Because of these squeezes. So if you can see where the stops are now, maybe while I'm away for a few weeks in August, you guys can be leaning up with these stops.
Look how the dollar is sort of hitting the stop, huh? Pinpoint there, and we're starting to, in live motion, we're seeing it short.
True, but I guess the difference with this is you don't know for sure that there are stops there, whereas with Bitcoin, you know.
You do.
So that's the thing. There's an assumption with this, and I guess the way that ICT teaches it, and all the T-Trades and everyone else who copies him, you don't need to just short into it. But with this information that you guys have got with CoinGlass, you could just short the goddamn highs. Don't even need to wait for a reversal, break of structure, fair value gap setups.
No.
Maybe you can be adding in, but you'll already be short near the highs if you want to hit them fairly early.
The crazy thing that I find with this is you can add to the long, and it's just, so if you're on Bybit or if you're on any of these exchanges and you want to basically, and you know that these yellow lines are coming up, these heat maps are hitting. On that reaction, you can add to that, or you can take from that, and that's something I can't do in futures. For example. So these are small little tips, for folks that are like just starting out to trade, and that's how we're able to just catch this short here on BTC. So currently BTC is down from that 119, 118. If you look at the heat map, we were sort of playing at that level. We had heat map levels there, and then if you look at what's happening to BTC, we shorted it nicely.
Lovely. Well, it's interesting that crypto's coming off, right, and the stocks are still relatively buoyant. This to me is a really interesting inflection point. I didn't realize we were going to spend as much time talking about crypto today, but I should have known with you back in town, Z, we were going to spend some time on crypto. I want to jump in and talk about the stock markets at these all-time highs before we look at next week. So if we have a look at the NQs here, the NASDAQ, stick this on a daily chart. I've not done the numbers myself, but this is the 20-day moving average. We have closed above the 20-day moving average every single day since the 24th of April. We are now knocking on the door of August. I haven't done the numbers, but I'm told this is the longest run of closes above the 20-day moving average in NASDAQ since when? Since 1999. What happened after 1999, Z, in the NASDAQ? Can you remember? Were you trading these days? I wasn't.
No, I was too young.
I was not quite there myself. That was the dot-com bubble. And we saw, 80-90% wiped off the NASDAQ after that. So there's a few interesting things in here and a few little basics that you might want to look at with. I was teaching a little bit of some of the more simple stuff this week, kind of 101 sort of bits and pieces. But you see we're getting some RSI divergence here at hugely stretched levels. The S&P, at least for now, is still divergent between this high we had on the 3rd of July. Where are we? We are just clinging on to divergence at these highs. It's setting up interestingly for me. And what's most interesting is this SPX. This has a huge gamma level. I always talk about these gammas. And it had it on Monday. We've been talking about this all week. 6,400. there's a huge level there from Monday, or it was there on Monday. It's there again today. This is the call wall today. So with some of the news that we've had today, some of the rumors that have come through, I'd be surprised if we don't go and give that a little touch, or at least within kind of 3 to 5 points of it. So could that be the final push higher before we get a little bit of froth taken out of the market? Let's see.
Just like CoinGlass, we have semi-group data that's free. Right, you can log in and you can see the call wall, you can see the put wall, and then you can sort of set up alerts there and see if there's any sort of movements around that. So this is something that I think a lot of traders didn't have a long time ago. Like, this data would cost quite a bit of money. Now it's in the hands of our fingertips, and I find that a lot of traders don't know about it. Which fascinates me. Like they should be using GBT. They should be using this data to their advantage. CoinGlass data, CME Group data, and finding where these calls and puts are, and then see where the big sort of moves are there. So I think as we get into this podcast, next week and the week after, we'll start to look into CoinGlass data this week. Maybe next week we look into CME Group data.
Sure. Yeah, let's look at it. I mean, and this works not just for the S&P. So I know a lot of you hear me talk about the gammas. That I do this purely on the SIBO stuff, but that's only really for the SPX and the NDX, the Nasdaq and the S&P. The CME Group data, this is for NYMEX stuff, so oil, natural gas. Get your COMEX for silver, gold, platinum, you name it. All these metals you'll get these cool kind of peak strike levels available to you for a whole range of markets. So I think it's something that should be added in. Information is power. So if there is information out there that someone else is using that's useful and you're not, you're at a disadvantage to them. And it's all about just getting that extra edge in trading. So highly recommend diving into that if you get a chance this weekend.
Yeah. The other thing I've been telling a lot of traders is using the charts and the daily charts a way of looking back in history. Like, we go to museums and we find out about sort of empires and civilizations. We can do the same thing with, like you say, the dot-com bubble here, or when sort of Silicon Valley, when we had Web 2.0 and sort of Facebook and Amazon, and how they sort of strived out to the 1,000 companies that failed. And we see these moves. So we have to use the charts in a way, in an interesting way, on weekends and stuff, to like study where we are in the sort of weekly and daily scales as well. Because I think a lot of folks, what they do is they zoom in too much into the minutes and the 5 minutes and the 10 minutes and 15-minute charts, and they don't use the tools as they should, which is sort of histogram. It should be used to see where the history was and where we were in 99 or 2000 or 2010. And a lot of new traders that start here, that's what we do with them, right? We use it differently, and they go back, they're like, we've never seen a chart used in this way.
Looking at history is really important. Like the seasonality of certain markets, the likes of natural gas, gold with the Indian wedding season, how well it does in the start of the year. Like, if you're not aware of these, you might just be kind of fighting the trends that you see. I wasn't going to bring this up, but now you mention it, like we're seeing very similar action on the S&P here, pushing up through the summer, as we saw through 2024 summer, right? We have this big rally through June into July, and lo and behold, right towards middle of July here, we had a really big washout that came through in the summer. Go back to 2023, we pushed up. When did we push up to? Into July, and then boom. I mean, this was a big one, right? This was a huge decline, lasted all the way to the October. Not quite as big as 2023, but it's still there. Which one am I looking at? Oh, we've gone too far. I'm in 2022 now, sorry. Through, here we go. It was a little bit late to the party, this one, but we rallied up till mid-August before the wipeout. I think 2021 was maybe even later than that. But when we have these big rallies up, or I guess you could say this was the little pullback. But after these big appreciations into the summer, we've seen quite a few times where the rug does get pulled. And we're in that situation, so overbought, divergences, spending so much time above the moving average. I think even just no news could be enough to bring this down. And then we've got the big spectra that is August the 1st. So a week today is self-imposed tariff deadline day number 7.
Is this a 90-day tariff that he's put on it? Are we talking about that?
This is the extension to the 1st, right? I mean, this is the 90 days that's lasted 163 or whatever it feels. It feels like 1,000 days. That's for the EU and China, the two biggest trade partners for the US, to get a deal done. Now, earlier today, this was announced.
What was the rumor?
The rumor was from EU diplomats that we are going to get a a deal this weekend potentially, or the framework from a deal, and this is what's led to this big rally in the S&P, this big spike up to the highs we had earlier. That was in the immediate aftermath of that news. So for me, into a Friday, if there is potentially going to be a deal done over the weekend, I personally wouldn't want to be shorting over the weekend here. But are we in a situation where, like, how good, even good news, how much further can this market go?
This is the thing. Sometimes we find the market sort of price in these things prior. So when we're looking for sort of long or short, we see it happen beforehand. So maybe these highs could be that. And then we take this out.
Buy the rumor, sell the fact.
Sell the fact, exactly.
Tale as old as time. Like, if everyone's predicting that this thing's going to happen, when it does, well, they were right. They need to take their profits. So if people are positioned for this, and certainly judging by the daily chart, it looks like they're positioning for deals to be done. Maybe even a really good deal for Europe and China by next Friday might not be enough to kind of give you another big rally in the stock market.
I'll take it back to when we started the dollar index.
Yeah.
Right. So we mentioned euro is the biggest portion, so 53%. So if a deal gets made with America, that's gotta have an impact on things, and maybe we're seeing it play out right now.
Well, yeah, and the numbers on these deals are going to be interesting, right? It's not just a deal; it's the deal that's done. So there's been a chat from Trump that he thinks 15 to 50% is kind of the ballpark for these numbers. But if you look at the European side of this, they don't want anything as big as 15%, right? We got away with 10 typically, so I think they'd be looking for something a little bit tighter than that. So if they do get a pretty hefty tariff on here, the biggest trading partner in stone could have a pretty detrimental tariff rate. So even if we do get a deal does not mean good news necessarily. It depends on what that deal is.
It's all dependent on other factors, I suppose.
Yeah.
Now, to end the podcast today, tell me a little bit about this.
Oh my God, if you haven't seen this, look it up. Trump and Powell having a... Oh, here we go.
I don't think we have volume.
Yeah, we don't have the audio, I don't think, on here. So, yeah, we'll leave this to... Oh, here we go. Well, these two... look how happy Powell is to be there. Very much the body language of a man who thinks that guy is a huge orange plonker. At this stage, Trump manages to pull out a document from his pocket, which surprises Powell because it says it's 3.1 billion now for this Fed development. And Powell goes, "I'm not aware of this." Has a little read and says, "No, that includes something that was built 5 years ago." Donald's like, "No, well, that was part of the bill." It's like, "No, that was finished 5 years ago." Donald, here we go. Here it comes. You'll have to have a look out for it yourselves with the audio. But these two, are very much not close allies, you would suggest.
Wow,
I saw
glasses are out.
Yeah, he's like, "What is this bullshit?" But he straight bats it and keeps calling Trump out on the fact that this was not exactly what Trump said it was. But nevertheless, Donald, he kept on it, and Powell kept saying no. Powell's in the crosshairs himself next week, right? We got the Fed rate decision on Wednesday. So this is the last one before the big summer recess, where instead of 6 weeks, we get 8 or 9 weeks between the following ones. And this is also a non-farm payroll week. So normally, the market can be pretty quiet on the Tuesday, Wednesday leading into the Fed. Then you get the Fed, and then the Thursday, things open up. But often the market's fairly quiet on the Thursday before non-farm. So I think it's going to be a weird week again. Again, the volumes are down. It's going to be a strange one. And look at the calendar for Monday, if you don't mind. This makes for some pretty interesting reading. You're really excited to take on this day on Monday? Nothing is happening. This isn't a holiday. You get more data on a holiday than you do on this. So pretty quiet Monday. Might be time to get back down on the waves.
The waves, back to Cornwall.
I might have a round of golf on Monday. We'll see. Jolts. It's jobs week. Fed rate decisions. Bank of Canada, same day. Chinese rate decisions. BOJ on the Thursday. So there's going to be plenty to get yourself into. PCEs, Powell loves. And then all crescendoing with non-farm Friday on Friday next week. Should be an interesting one. Although I think we've got the work summer party, have we not, on the 1st?
Yeah, off to Brighton.
Okay,
Brighton.
So a big day out in Brighton for everyone. I'm away golfing, sadly. Well, luckily maybe that weekend. I think it's going to be a wild one. I'm a little bit long in the tooth for these sort of parties these days anyway. So yeah, hopefully we all make it through next Friday and make it through the week. But yeah, just be mindful. Wednesday Fed, Friday non-farm payrolls, Monday in terms of data looks like a waste of time. So yeah, all about those technical flows and leading into it. But I wouldn't be swinging for the fences too much on Monday. Let's put it that way. What's your take for next week? Got anything in mind?
Yeah, just play it smartly. I just think like we are always looking for the next move. Use the sort of historical data just to predict what happens this week. Is prices, like currently, like we're making these highs on S&P. How much higher can we go? Like these are questions that you should be asking if you're looking to long into this and FOMOing into this. Is the problem with new traders and experienced traders where we FOMO into these sort of moves, and I think be very cautious of what happens on Tuesday to Friday with all the news.
Yeah, well, I certainly wouldn't be a buyer of stocks right now. I feel like I like buying dips, right? I mean, it's not to say it can't go higher. Of course it can, but I'm always keen to see if you can get at least a few % off the market before you start dipping your toe in these things, and we haven't had that for a little while now. So I think one is around the corner. Who knows? Maybe when it comes, I'll still be buying higher than here. But I'll be waiting for that to happen, and who knows? Maybe it'll be something a little bit more meaningful like we've seen in previous summers. But big week ahead. Yeah, thank you for joining us on the Educate to Trade podcast. I've been Chris Pollok.
And me, Z.
Thanks for that on crypto. We'll maybe dig on that next week.
Yeah.
Have a good one.
Thank you.